Okay, this video I'm doing is on the real or the best AMC trade, in my opinion. Um, if you can watch some videos of mine, you'll see in my channel, and I'm posting this in my Sales Ronin channel because, again, I don't sell for a company, independent sales, and I sell what works. Like, I'm not beholden to any company or any product. I just sell what works. That's why I use the term sales running. And I've been in the markets myself since 2000. Been professionally trained in stocks, options, futures, currencies. Also worked for the top S&P 500 trader and the top options trader at the Chicago Board Options Exchange, and for the better part of a decade. And so what I'm teaching you here and going over here is really my basic experience and what I actually do. This is my personal money, my personal strategies. This one specifically on stock. So I had a buddy of mine tell me, he goes, "Hey, Drew, I'm buying AMC." And I'm using Yahoo here. It's free, Yahoo Finance. They do have paid services, but I'm specifically going over this through Yahoo Finance because I know a lot of people don't have a lot of money, or don't know which services to pay for. So I say, yeah, until you know what service to pay for, use the free stuff. And Yahoo's a good launching point. I use a bunch of paid services, but I don't want to give you guys my personal. I mean, I like companies like Investor Business Daily, Guerrilla Trades. Those are all good companies for pay, but I don't use them by themselves. I need those from the mix of things I do. But so a buddy of mine says, "I'm buying AMC." This is last week. Goes, "I love AMC. They're going up. Everyone's buying them. Everyone's hearing this is a meme stock or a Reddit trade, right? Because everyone is trying to push the stock higher and and really make all the big hedge funds that are shorting the stock pay for their positions, meaning like get the man back, right? Pay, stick it to the big banks, the big institutions. Let us small traders, buy this the stock and bid it up, and so this friend of mine says, I bought AMC. And they're going to go up, and they're going to keep on going up. But you got to understand, this company does not make money. It's not profitable. Everyone had it as a sell rating. All the analysts that were covering it, and this is before the pandemic, because traditional infrastructure-based companies that have a lot of overhead, a lot of real estate, a lot of employees are just becoming less and less profitable as consumers are able to just grab stuff online. Right? We can watch our movies online. We can watch them on our phone. No one wants to go to. Some people want to go to a theater, but it's less and less people. So this company was already not doing well. The whole reason why it got a lot of interest in the market is because a group of traders said, "Let's bid up the stock to screw the big financial firms that are shorting the stock, that are betting it down." Right? And it's worked. The stock's gone up. It's gone up so much that AMC executives were able to do another sale of shares to raise money, and it went off really well. I mean, they raised billions of dollars. So the company's going to reinvent itself. It's going to use that money but it's in tons of debt. So my buddy's like, "I'm buying it," and I think he bought it at like 55. So the traditional trade that a lot of people are doing is buy it with a goal of it going up based on what people are willing to buy and sell it at. I say there's a better trade. Now, this buddy of mine goes, "Well, I'm buying it for 55. I think he bought it for 55. This is last week, and I'm going to sell the 60 calls, right? Because they're going. I think the time they were going like for $8 or $800 a contract, right?" So that means, and this is more sophisticated than just betting it up, right? Buying it at a price and hoping it goes up. But I want you to know that if you just bought the stock by itself and last week it dropped 20%. So that means you lost 20% of your money if you did a traditional buy the stock and hope it went up, right? Now this week it is up, but that's what can happen on a stock that doesn't have any base value because it doesn't make any money. You're just relying on the hype and the up and down in the market. So he was definitely more sophisticated. He says, hey, I'm buying the 55s. If it's a stock at 55, I'm selling the option at 60, right? So he's going to pocket, I think at the time or what it was going for was like $800. So basically, and you can watch some more videos. I'll do more videos on options, how they work, and why they're so valuable. But just in this concept, if he bought at 55, he sells the 60, he pockets $800. What you have to understand is if it hits 60 or higher, he loses the stock, it's gone, but he obviously keeps what he sold the option for. Great. But what if the stock goes down to 40, which it easily can do? Yes, he makes his 800, but he loses $1,500 in value. So you tell me, if you buy the stock at 55 with the hopes of it going up to 60, you make $800 because you sold the option. Again, you can watch videos I do on options and how they work, especially call options and selling call options. So 800, and then I'm doing this for people that do this, right? Because this is a more sophisticated trade than just betting it up, right? You're just buying 55 with the hopes of it going up, into infinity, right? Because it's such a hot stock, everyone's buying it, right? So 55 to 60 is more strategic, and yes, you do pocket $800 selling that option. But if it goes down to 40, which it can easily do, heck, it can go down to 20. It was at 15, I think, a few months ago. So if it goes down to 40, and that's a very real number it can get down to. It was just down to 40 range just a little while ago. So you lose $1,500. That means even if you made $800 in the option, you're still negative $700. And by the way, when a stock's going down, you can't sell more options. The value of the options go way down on the calls very fast. So you can't, it's a losing proposition. The stock has to keep on going up to do this play, okay? To do just a simple call play where you're taking an option premium on a stock going up only works if the stock's going up. So the best trade, and to prove my point, I did this with the intention of teaching my friend a lesson, a good lesson that anyone, and I'm doing this video because of this. Yes, buy AMC. Take advantage of this huge market uptrend, right? Let's say you get it at 55, and I'm just using this arbitrary number. I think I bought it at 57, just so you know. I think I bought it at 57. So, but I'm using his number, 55. All right, so it won't be as profitable. You do sell the 60 call. Great, take in that premium, right? I think I took in, I'll bring over my chart here in a second. I took in 700 and change. Great, awesome. So if it goes up to 60, I'm going to get called out. So that means I got to sell my stock and I keep the premium, $700, right? Awesome. I'm happy. But I also bought the put. I bought the $50 put. That means I have an insurance against a downside move. Now I had to pay $400 for that put. All right, so that's actually going to eat in. I know I put plus here, but it's actually minus because it came out of my account. Okay, $400 came out of my account. $700 went in for selling the 60 calls. $400 came out, okay, to buy the puts. So my net profit is $300. Now, why is this the best trade? Worst case scenario, I keep $300 profit. That's the worst case scenario. Why? Because the stock gets called out, right? It goes up to 60. The option gets called out, meaning I have to sell my shares. I keep the 700. The puts expire worthless. Okay, so I had to pay for those. My net profit, $300. Again, this is for people that actually know how to use options. If you don't, I'll have videos about that. But that's the best trade. The best trade is to take advantage of that move up, but have an insurance policy against the downside. Now, if it goes down, right, my puts will become more valuable. And if it goes down to 40, these puts could be literally worth $1,000. So I made the $700 on the upside. That expires. I still own the stock, but my puts become more and more valuable, especially if it drops below $50. And you can even see, I'm going to bring it over here just so you can see the value in my actual account. I did this for a couple stocks. You're going to see a couple stocks here. Well, let's just take the AMC. I'm going to scroll down to AMC puts and calls. You can see I sold the 60. I took in $759 to be exact. $759 to be exact. I bought the puts on a downside to protect myself. So if it goes below 50, these will be worth more money. Those cost me $430. So if you do the math, I made $329, or $328 and change to be exact. That no matter what, I'm going to keep. That's the worst case scenario. Best case scenario, it stays within that range, and I can do this again next week. Pocket some more money next week. Best case scenario is the stock starts plummeting below that 50 mark. My puts become super profitable, and I do what's called an exchange. I just sell the stock and sell the puts at the same time so that I pocket 100% of the profit on the puts as the stock drops like a knife. So again, that's the right trade to do, especially if you're playing, these meme stock, Reddit stock, massive value propositions on the upside. Because what happens is if a stock goes up drastically very, very fast, the volatility and value of the options get so inflated that you can do a trade like this where you sell the call above the actual price, taking tons of premium, but take some of that profit, man. Buy some puts. Protect yourself on the downside. And that is the way I did trade it, and I would recommend it. But again, I am not your financial advisor. So if you want to do any of these kinds of trades, do your research, do your due diligence, make sure you know what you're doing, and be careful out there, especially with some of these crazy trades people are recommending, and a lot of these people have no clue what they're doing. So I hope that was valuable to you, and that's how I did and would trade the AMC trade for this week.